The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 16th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time, at 11:07, thank you so much for doing that. We'll make this show as pertinent as we can for that trading hour. But if you are listening live, we would love to hear from you. So you can give us a call, 877-927-6648. If you'd still like a question answer but can't call in, you can always send me an email. For that, you send it to Steve at TFNN.com. And if you'd be kind enough to put radio show question inside that subject heading, of course. If you are inside our Tigers den, well, any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, U.S. equity futures trading to the downside. Dow's off 292. S&P's down 50. NASDAQ 133. Russell's down 19. That's 0.8%, 0.5%, 0.9%, and a little over 1% to the downside. Over in Asia last night, markets were mixed a bit. The Hincks finished up 0.5% or 82 points. Flat basically in the Shanghai. The Nikkei down 524 points there. Over in Europe this morning, the DAX is down 62. The FTSE is up 89. Big move to the downside yesterday inside of the DAX. Gold's up $7, with silver being down 14 cents. Light sweet crude is off $1.61. Natural gas is off 41 pennies. That's a big move to the downside. $6.17 is the current print. 30-year Treasury is off 25 ticks, trading out at 131.09. The U.S. dollar index just turned slightly positive. It's basically flat at 104.20. So let's begin short term. What's going on? We're going to switch over to the 30-minute time frame charts. I think they are the ones that we should be focused on. When I say 30-minute, I'm referring to the equity future 30-minute charts. In the upper left-hand corner, you'll see the ES Mini. Upper right, the NQ. Lower left, the Dow. Lower right is the Russell 2000. What you will see is 3 of the 4 formed, completed, confirmed, Rhodes Momentum Indicator bottom patterns. In the case of the ES Mini was 6:30 this morning. In the case of the NQ, it was at 6 o'clock this morning. In the case of the Dow, it was at 6:30 this morning as well. And they didn't get that same bottom pattern or signal inside the Russell 2000. Oh, great, Stevie. Well, why'd you take us here? Well, I took you here because when we take a look at this, we've got 3 of the 4 with nice bottom signals. And now what we can see is where's the real battle. See, the battle's not with the NQ. Price was able to take out those sellers on a 30-minute basis. That was the top of that profile at 11,377. And if we did not take a look at the other indices out there, we'd think the market was getting ready to take off. I mean, after all, if the markets are going to move higher, it's going to be led by the NASDAQ. And if they're going to move lower, it's likely led by the NASDAQ as well. Well, not the case. We take a look at the ES Mini, we can see that price likely stopped where it did because that's where its sellers are lined up. And its sellers are lined up at the top of its profile. The top of that profile is at 38.98. That is the level to be watching this morning. If it's 11.10, it's 8.10 right now, and price is trading above that, 38.98, chances are we've got a further rally. Now, where would it likely target? I'd have to say the recent highs from yesterday in the 39th or early this morning. 39.33-ish area. That's about where we were closing yesterday. However, even if price in the ES Mini gets above that, there is one more battle that will unfold or could unfold, and that is at the Dow's top of its 30-minute profile, and that's at 33,220. So we know right now is that we just have a bit of a counter trend move out there. I'd watch the ES Mini. I'd say that's the most important chart at the moment. And if price can clear that 38.98, then we'd watch 33,220 for the Dow Equity Future contract. Now, let's move from the 30-minute chart, because it's not just the 30-minute chart that's going to provide us with the information that we need. We've got to do a little bit of hunting and pecking to try to do that. And here we'll take a look at the multi-time frame, the entire set of multi-time frame charts for the ES Mini. Now, the upper left-hand corner, even though I don't show it, what price did yesterday was it broke below the bottom of its consolidation pattern. So we've got a measured move that maybe takes us back into the 37.50-ish area out there. I'm just ballparking it. But what we do know is there's a breakout level. This could likely be the price target to the downside, which is 36.21. If we look at the 5-hour time frame chart, at 9 a.m., so 49 minutes from now, a TD9 count bottom pattern for a 5-hour time frame will go ahead and confirm. Now, that pattern will complete at 2 p.m. today. Why complete at 2 p.m.? Because it could be the bar following bar number 9 that would identify the top or the bottom. So let's go check out the TD9 counts on the 5-hour time frame. Let's go to the one most prior to that. Well, there was a TD9 count bottom that formed out here at about 5 o'clock in the afternoon on January 28th. Right at about the breakout level of support. We had a TD9 count top that formed out here at about 2 o'clock in the afternoon on November the 8th. That led to a bit of a retracement out there. Here's a TD9 count no, this was not a valid TD9 count, so we can skip over that. That was because the high did not occur on bar 8-9 or the bar following bar number 9. This was also not a valid TD9 count. So I don't want to keep belaboring the point out here. The point is, though, that you've got a bottom pattern, a bottom signal that's going to confirm at 9 a.m., again, 48 minutes from now. And that would suggest that price should go target its oscillator and change line. And that's up at 39.57. So that makes the 38.98 level a very key area to watch for the 30-minute time frame. You can see if you look at that full bottom panel out there, that's a 10-minute, 15, 30, and 60. Each of them have Rhodes Momentum Indicator bottom signals. But all that means is that there's just a bit of a counter trend relief that's out there. And we know that also on that 30-minute basis, price did find resistance where those sellers were lying down. The 2-hour chart, I don't have any kind of I take that back. The 2-hour chart confirmed a buy the D point pattern. It did that at 8 o'clock, just as we were coming on the air, with that bullish engulfing candle. So you got A to B, C to D, so you've got to buy the D point pattern. 4-hour chart has already confirmed a TD9 count bottom. So everything is really set up here, with the exception of the daily chart, that is. Everything is set up to see a bit of a counter trend relief type rally, at least with regard to the intraday signals. Now, the cool thing about these patterns that are out there is even though that's what should happen, what if that doesn't happen? And what I mean by what if that doesn't happen, I mean if we see price close below 38.7125, a number to write down on your pad of paper, that's going to tell us we're headed lower. And again, that lower price target, not that I'm saying we're going to get there today, is down at that 36.21 level for the ES Mini. So I suppose what we should do when we get back to this break, I don't have any questions inside the Tiger's Den. I don't believe I've got anything by email just yet. So why don't I just set up the charts? We'll go take a look at what's going on inside the U.S. dollar index on an intraday basis as well, because that's another piece of this puzzle. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow futures down 310. S&P futures are off 34 right now. We're taking a look at the U.S. dollar index charts out here. We do have some requests that have come in. We're taking a look at natural gas and silver momentarily, but we're trying to put together the pieces of the puzzle for the equity futures. We were looking at the ES mini charts out there. We saw those bottoming patterns on the intraday, just giving us a sign of a counter trend move out there. We identified the resistance level, a key resistance, which was the 30-minute profile top for the ES mini. Now we take a look at the U.S. dollar index. If there's going to be a rally, now there's a 10-minute delay that I've got on my U.S. dollar charts out here. But if there's going to be a rally, well, what we should see is U.S. dollar index move lower. Well, if we take a look at the weekly time frame chart, what we can see is that bar number 9 is going to complete today. So the U.S. dollar index on a weekly basis is going to confirm a TD9 count pattern today. It's going to complete that pattern next week. And that suggests, let's just open up this weekly chart out here. That suggests that the U.S. dollar index wants to head higher. Yeah. Wants to head higher out there. As far as the TD9 counts on the weekly time frame, you had a nice TD9 count bottom that formed January 8th back in 2021. That was obviously a very key low. We had a TD9 count top that formed out here in November of 2021. That led to a sideways and a slight pullback out there, so that most certainly worked. Another TD9 count top out here that actually failed. This was back in May of 2022. Out here, this TD9 count top did not identify the top because it was bar number 7. That was the high, but it was a Rhodes Momentum Indicator top out here on a weekly basis. That confirmed with that bear sash candle week of October 21st. So that has led now to a TD9 count bottom. What I haven't seen out here, well, that was a bar after bar number 9. So we should see a bottom inside the U.S. dollar index form basically between today and sometime next week. If we look at the daily time frame, well, yesterday suggests that it's that bottom formed yesterday. Why? Because as you've got a weekly bottoming signal, you like to see the intraday charts, in this case here, that would be the daily, give you a bottom pattern as well. Well, you got that Rhodes Momentum Indicator bottom pattern yesterday. What the U.S. dollar index should do is move its way up to the 105.17, 105.68 level. Well, if that's going to happen, then you can forget about whatever counter trend move that you see out there. Be looking for a place to sell that move as long as U.S. dollar index continues to move higher. Again, I've got a 10-minute delay out there. If you look at those shorter term time frames, whether it's a 5-hour, 4 hours got a Rhodes Momentum Indicator bottom, TD9 count bottom. The same thing for the 2 hour chart out there, Rhodes Momentum Indicator bottom on the 60-minute chart. So what we're not seeing here are signs of a top inside of the U.S. dollar index, which is what you would want to see if there's going to be any kind of substantial rally. So hope just going through that whole process helped you out. And if not, my apology. But if it did, then that's a wonderful thing. So let's do this here. I've just got to readjust my charts, get the data feeds going here correctly. It'll just take just a brief moment. And when we do that, we'll be able to go take a look at the natural gas charts. We'll be able to take a look at the silver charts out there, and, of course, anything else that you want. Okay, so we got the data feeds connected now. Let's get over and take a look at natural gas. Let's do it via – let's pull up Stevie's natural gas charts. Now, these are going to be the February natural gas charts that we're going to take a look at. You can still trade the January natural gas contract right now. We've got January that's going to pop up on my screen. Nice move there, Stevie. Okay, so we're looking at January. Let's let this here populate. On a monthly basis, all price is doing is just consolidating with inside a profile. On a weekly basis, there's a nice TD9 count bottom in place. What price has done this week, as it has done since that TD9 count bottom formed, has got up and tested and rejected that green oscillator and change line. So S&P 705 is a real key level of resistance that you would like to see natural gas close above in order to suggest that price is going to go ahead and take off. Now, on a daily time frame, we really have that signal that price does want to take off. That takeoff spot should take you to $7.42. $7.42 on the January contract. The reason is because price is trading above the top of its daily profile. It's above its oscillator and change line. Both of those are bullish type conditions out there. Well, if those are bullish, then what are the intraday charts telling us? Great question out here. So on an intraday basis, nothing to shake our head at on a 30-minute chart. 60-minute time frame, we do have bar number 8 that is forming as we speak. That'll complete at 9. You could have a TD9 count that forms between, in essence, now and 11 o'clock this morning. 120-minute chart needs more work. So I'm not getting great bottoming signals. Of course, we're not looking at the ultra short-term time frames. The shortest term time frame here is a 30-minute, but we still don't see that bottom signal other than the 60-minute. Still needs some work to do. Still has to complete bar number 9 out there, but it's got the potential for a bottom. So what you're really watching out here, S&P, is really the top of that daily profile, the January contract. And the top of that profile is at $6.37. If price remains above it, natural gas should continue to move higher. If price gets back below it, well, then you're back inside the profile. You could easily see a move back to the 575, 554 level out there. So I hope that helps you out with regard to natural gas. Thanks so much for taking the time to write in. Have a fantastic weekend. And let's go pull up the charts here for silver, for Jack. So we'll pull up our silver charts. Give me a moment. Here we're taking a look at the March 2023 contract out here. And, sorry, an ice cube slipped into my mouth. I don't have any other way. I could swallow it, but that's kind of weird. It just simply chopped through it. So we were speaking about TD9 counts a bit earlier. And if we look at the weekly time frame chart here for silver, this is going to go ahead and complete a TD9 count top today for the weekly time frame. It'll confirm that pattern, I should say. It'll complete that pattern come next week. So we should see a potential intermediate term top inside of silver that either forms now or next week. That sort of lines up with what we just looked at when we took a look at the U.S. dollar index charts out there. If we look at silver on a daily basis, well, yesterday was a confirmed Rhodes Momentum Indicator top. Now, there is a new profile in silver, and the bottom of that profile is likely to be tested. That's at 2263. If price closes below 2260, by the way, the top of the profile is 2439. The center's at 2351, and 2263 again is the bottom. If price were to close below 2263, then more likely than not, we would see a run to 2104. Now, as we start getting into the intraday time periods out here, 30-minute, Rhodes Momentum Indicator bottom with no top. Same thing on the 60-minute. 60-minute says you got a battle at 23.22. If price can close above 23.22, we should see a run to the 23.26 level. 2-hour chart not helping us. 4-hour chart, price had a Rhodes Momentum Indicator top. It pulls back to its breakout level. Pulling back to a breakout level can be a bottom. And that was at 22.87. You're in bar number 8 on the 5-hour time frame chart here. For silver, in order for bar number 9 to complete, you're going to need to see price close. Now, that's on a 5-hour base at 2 p.m. You're going to need to see price in the case of silver close below 23.28. So summarize this for me, Stevie. You've got a top on the weekly that is either in place or will complete by next week. You've got a definite top on the daily with the Rhodes Momentum Indicator top. Price should pull back and test that 22.63. If that area holds, that would be your buy point type level, but be concerned about that U.S. dollar index that wants to move higher out there. That's what Stevie sees. Jack, or take a look at silver. Hope that helps you out. Thanks so much for the request. We'll be back in just a few. Of course, I'd love to hear from you at 877-927-6648 or more requests out of the den. That would be just as helpful. Right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I think a little different intro back to the show. Doesn't matter. So we've got the charts up here for the 30-year Treasury on our screen, the March charts out here. And not really a question, just noticed some comments inside the den. So thought I'd just simply share with you what to be watching for today. So here's the daily time frame chart. At the moment, you have a bear sash candle out there. Now, the importance of that bear sash candle is that we're at the potential completion of a pattern, that pattern being a Rhodes Momentum Indicator top. Now, what we can see about the 30-year Treasury, that has had a very nice move. If you get that bullish or bearish reversal candle today, what you also then need to see is a close below the oscillator and change line. If we get that, then what we should see is price continue to pull back even further out there. So that's what I'd be watching for. You got no type of signal, such signal on a weekly time frame or monthly, so it's really the daily, and you want to watch what's taking place there at the end of today's trading session. On an intraday basis here, 30-minute time frame, TD9 count top. That formed out here at 1:30 in the afternoon. That was yesterday. Price right now did close below its breakout level of 131.02. So this is signaling to you and I that if this next half-hour session, the one that ends at 9 a.m., you see the 30-year Treasury below 131.02, it's telling you that there's something maybe different going on here this time around. In fact, that the rally may be over inside the 30-year. But you still want to see it close below the green oscillator and change line. That is the 30-year Treasury. We have a couple of questions that have come in. Let's get to those. The first one coming in from Alex. And Alex wants to take a look at ticker symbol APA. Is that Apache? APA is, what is APA? APA is APA Corporation out there. So I believe, let me actually read the question. It'd be good to actually open it up. It says, hi, Steve. Looking for price to buy APA on a pullback. So as we take a look at this, this has a wave number 7 top out here. That is a letter G. That has led to basically a consolidation with inside its daily profile. There's a new profile that formed a few days ago out here, Alex. I don't have a bottoming pattern. You know, there's an A to B equals CD pattern. It looks like this. I'm just going to draw the A to B line. And then I'm going to move that over to where the C starts. Happens to be actually letter C as part of the Chapman wave tools out there, but not the same. So I don't think it was close enough. You know, they got that bull sash candle on the 12th. Not really the completion of the A to B equals CD pattern out there. So I would say at this stage here, with price just consolidating with inside its current profile between 42.44 and 45.16. Let me see where price is trading in the pre-market out here. If I can figure that out. APA, last trade, fired up at 43.99. So if I go back to that, so what I say, 43.99. So it's pulling back. So 42.44 is one possible area. That's the bottom of that profile. So if on an aggressive trade, that would be the spot to look at. If price were to close below that, or if price is pulling back into the most recent swing point out there, that was from December the 9th. No, that had volume of 6.8 million shares. You're not going to know what that's going to be like in the first 15 minutes or hour of trading. But if price is pulling back with volume into that area, then really that 39.02 level, the breakout, would be the area where you would be paying attention to. And you've also got a 39.04, the top of the weekly profile. So at this stage, that's what I would go with regard to APA, Alex. And, of course, you'd want to see some kind of intraday bottoming signal as price gets back. And that 39.02 level, I don't know whether you'll get that or not, but that's what you'd want to see. It'd be something like this here at the bottom, where there's a Rhodes momentum indicator signal that went ahead and confirmed at 10 o'clock on December the 12th. And then you've got a Rhodes momentum indicator top out here. That's led to this move lower. So not much else that I can report to you on APA. So again, in summary, APA, I'd say be watching the 39.02-ish type area out there, 39.04 for a potential buy in that instrument. So thanks so much for taking the time to write in. We've got another question out here. This one coming in from Brent in Martinez, California. Good morning to you, Brent. This was came in at 8:27. You got to love somebody who's catching the early worm out there. Nice to hear you sounding much better this morning. I am certainly much better than I was last Friday. Considering the day trade likely to the bullish side, is there one of the equity futures contract that stands out as the better choice? Always appreciate your help. Have a fantastic weekend. Is there one that's better than the other? So let's do this here. Here's the ES Mini. The ES Mini, Brent, because I know you're up early. I don't know if you caught the first part of the show. The intraday charts here show nice bottoming. Rhodes momentum indicator bottom signals, 10, 15, 30 minutes, 60 minutes. You've got nice bottom patterns, potential bottom patterns in the 4 and 5 hour charts out there. What I would be looking for, so you've got resistance on the ES Mini at the top of its profile. That's a 30-minute profile. That is 38.98. That's going to be a real key area. So, that's resistance out there. For the ES Mini, the potential buy, if you're trying to take a long position, is going to be between 38.76 and 38.82. And that's the bottom and center of its bullish structured profile for a 30-minute time frame out there. We're just going to put up the NQ charts. So I guess One way I might say, let's take a look at the Dow charts, actually, because you want one of the four. So the Dow has been stronger than the others. So in a market here where, Brent, we took a look at the U.S. dollar index, that was indicating it wants to move higher. I wish we could have found intraday topping signals there, because that would then support, and not that we can't see the markets move higher, but it would more support what it is that we're looking for out there, trying to find a tell, so to speak, for you. So I take a look at this 30-minute chart here for the Dow equity future contract. Again, bottoming signals for those shorter term time frames out here. Not a bullish structured profile for the 30-minute time frame, but its potential buy point would be down at 33,049. Knowing you've got resistance here at 33,220 on the Dow, maybe that. So it's really the NQ on its 30-minute time frame. But if you look at the Dow, 5-hour TD9 count bottom is going to confirm at 9 a.m., complete by 2. TD9 count bottom already in place for the 4-hour time frame. Of course, that does say that if at 9 o'clock, we've got 20 minutes or so, price were to close below 33,006, that'd actually be telling us about lower price coming at us, not higher price. But that's not the signal at the moment. All kinds of bottoming signals. So we know the market is attempting to bottom. It's just, will that U.S. dollar index cooperate? That's really the question out there. And part of that really, Brent, gets back to the euro, which confirmed a sell the D point pattern yesterday. So the move that we've seen, the counter trend move in the euro, may be over. If that's the case, because of the 57% weighting of the euro inside the U.S. dollar index, that'll just simply continue to move that U.S. dollar index higher. All right, enough babbling, Stevie. Go ahead and put those NQ charts up here on the screen. Let Brent take a look at those. And Brent, on the NQ on a 30-minute time frame, price had closed above the top of that profile. We'll see if it still is the case out here. I doubt that it is, but let's let these charts here populate. Okay, why are you taking so long? Okay, come on, populate here. Okay, so you got a TD9 count on the 5-hour chart, one that's in place on the 4-hour chart already. So the same types of patterns out here. The NQ is trading above the top of its 30-minute profile out there. It's actually testing it right now. The top of that profile is at 11,377. We're at 11,380 out there. So of the three that we've taken a look at, you got to watch the ES Mini, and you have to watch the top of that profile. If you're going to take a trade because you'd like to take a trade where resistance isn't an issue, then I would say it would be the NQ out there. But I'd be cautious based upon our review of that U.S. dollar index chart. Steve Rhodes with TFNN. And Brent, thanks so much for their question and for waking up early. And you have a fantastic weekend as well. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back up, folks. It is 8:42 if you're joining us at the normal time, 11:42. Thanks so much for doing that. We'll be back to normal programming on Monday, the 11 a.m. time frame out there. Presently, you've got Dow Equity Futures trading down 373. That's a little over 1%. 0.6 for the NASDAQ, or 69 points. 41 points for the S&P, a little over 1%. Over 1% for the Russell as well. That's down 21 points. Gold's up $7. Silver's down 7 cents. Light sweet crude is off $2 and change. Natural gas down 51 pennies out there. Let's go. Well, actually, let's do this. I was trying to answer Brent's question. He was saying, of the 4, which one would I take a look at? Equity futures. Now I'm back to the Dow. So here's the daily time frame charts. They show the descending price channels that the ES, the NQ, the Russell are still in. The NQ, which had busted out of its descending price channel, is actually pulling back to test that. Now, that could be a level of support. We also see the bottom of its weekly profile is listed at 32,923. So if price can test and hold that level, that still keeps the Dow in a bullish formation out there. If, on the other hand, price dips back or closes back below 32,923, price will be below the bottom of weekly profile. It'll be back inside its trading range, so to speak, that descending trend channel. That'll say that was a false breakout to the upside. That would be bad news, because what that could be really signaling is that price is going to make a beeline for the bottom of those descending price channels, and that would take us below the October lows out there. So just something to consider. But again, right now, the Dow Equity Future contract sitting at a potential area of support, running at 32,923 level out there. So hope that helps you out as well. If I take a look and just simply, we don't have any requests. Oh, hold on a minute. We might have a request out here. We've got a caller. It is John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing very well. I will just make a comment that you're doing the show early here. For me, and I know many of your listeners on Tiger TV, works very well getting prepared for the day's trading. So thanks for doing this early.
My pleasure.
In lieu of 1 o'clock.
Yeah, my pleasure. My pleasure. So Goldilocks, you are the gold expert here inside the. Well, we get. I will say, you're like 1A right behind Obi-Wan. Tom.
Yeah, you're right. Exactly. I'm glad you caught yourself. No, the expert on gold is Tom O'Brien.
Yeah. But you're right there. You're trailing him right behind him. So I know you called about gold, and so how can I help you? More so, what's your take? What is it that you're looking at?
Yeah, no, Steve, I'm going to, without giving any personal opinion.
Yeah.
One thing that's clear: November 3rd was a key bottom. And now the question is where to from here. And I'm not going to offer any comment on that. I've got my guesses, but I must confess my guess is likely no better than anybody else's. So having said all that, very specific question on the February gold COMEX contract. can you look at your tools and techniques and your price parameters and share with me what price level? We're currently 1796. We've fallen off of 1836. That was the high that was reached on Tuesday on that CPI reaction. What price, if gold goes under, to you tells you that 1836 top stands for a while, meaning more than a couple of days?
Well, that's a good question. So let's do a couple of. That's a good question. So let's do a couple of things here. At least one thing that we can take a look at, and that is, so you pointed out that we had a nice rally on Tuesday, Wednesday, Thursday, on Tuesday, and that rally took us right up into a resistance level. Turns out that resistance level, John, 1836.90, was the top of its weekly profile. The actual high on that day, I don't know how this works, 1836.90. It's amazing, isn't it? To me, when they hit like right to the tick, I'm just, how does that happen? So here's what we can.
The answer to your question is the weekly profile ranges. I believe, who was the fellow who was doing a show on TFNN for a good while on the TAS market profiles?
John Logan.
Yeah, John Logan. Of course, he put those into practice, and of course, he learned that mathematical technique to develop those profiles from somebody out of Chicago long ago.
Stottlemyre.
Suffice it to say, Steve, those tools, whoever developed that long ago in time, and I apologize for getting that individual's name because it's quite important and quite a useful discovery.
Yes.
Were time tested, and there's a great many algorithmic traders, whether it's the likes of Citadel or Virtu or numerous other firms that we just haven't heard of that are quiet.
Yes.
Think Renaissance Technologies, for example.
Sure.
Those outfits, at least somebody in that group uses that profile info and has their computer systems set up to trade with that, and would have top ticked it with, sell orders right there. So the answer to your question is, how does price go right to a level and stop? That's my answer. Of course, I could be dead wrong, but makes sense to me.
I love your answer because I'm going to be able to take your answer and help answer your question. That's pretty cool. So we know, as you say, some desks somewhere are using these profile levels, and price stopped right where it did, right at that tick. And your question was, where does price need to close below to suggest that maybe that is a significant top? And so therefore, the same group that is using those profile levels, they should use those profile levels as price approaches the bottom of that weekly profile, and that beats 1734.70. I am not saying price is going to head down to 1734.70. What I am saying, and based upon our conversation, is the answer to the question would be, if price closed below that, then we at least know that those groups or trading desks, would have you, have gotten overrun by sellers, and that would at least suggest lower price.
Hey, Steve.
Yeah?
That's perfect. I'm looking at Tiger TV with that beautiful black background chart with all that data.
Perfect.
Let's stop the conversation on that right there. That's all we need. 1734, bottom of the weekly TAS profile. I'm looking at the weekly TAS profile history going back further into the year. It's quite obvious just looking at that. That would be a key mark. And, of course, 1734, bottom of the weekly TAS profile, lines up precisely with that swing low back late November at 1733. So thank you on that. I'm going to just ask one last question, and then I'll hang up and listen off air. You did a fine discussion on COMEX silver about 20 minutes ago. Very specific question. If silver rallies further off of today's low that occurred earlier in the day, if it rallies over what price do you think we're heading back to highs and higher highs? That's the question. But thanks so much, Steve. We'll talk to you next Monday.
Have a fantastic weekend. We'll be right back, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Back up, folks. So we're taking a look at some charts here for silver. Got our 4-panel multi-time frame charts out there. And the question that was posed was, what price does silver need to close above to suggest that the rally continues? And that's a pretty easy answer. Yesterday was a bearish engulfing candle. What's not shown here is that that bearish engulfing candle confirmed a Rhodes momentum indicator top. Because that candle engulfed the at least the prior 2 bars, really 3 bars out there, it's the high of the candles that engulf that is your resistance level, John. And so that says that price must close above the high from the 13th, which was 24.39, to suggest that the rally continues. And that rally continuing up to the area or targeting 31.12, 31.11, that is the top of the quarterly profile. Now, price is, there's a brand new, so we got a top yesterday in the daily time frame. When you get a top, all that really price is supposed to do is go back and test support, especially if it's still in a bull run. Well, if we take a look at the bottom of these daily profiles, we're in the left-hand panel out here, we can see that price has found support. Each time the buy, the dip area has been the bottom of that profile. Now, you got a slight close below it on October 14th. The very next day, price packed right up above the bottom of that profile. So that was a false breakdown out there. So 2263 is going to be a key level to be watching. If there are 2 consecutive closes below that, that tells us that the Rhodes momentum indicator top is triggered, has kicked in, and price should pull back further. Today will complete bar number 9. I put bar number 8. I apologize. It's really today will become bar number 9 of a TD9 count. So you've got a potential topping signal. We do know that high can form on the bar following bar number 9. So I don't know if it's this week as the top. It's just that this week lines up with that daily. The weeklies line up with the daily topping signal that suggests that this should be a significant price point to watch. But again, I'll have to go back to that daily time frame and say if you take out that high, then we're likely to head higher when it comes to silver. So I hope that helps you out, John. Thanks so much for the call. Thanks so much for the request. Thanks so much for the request from everybody inside the Tiger's Den. Those that got up early with me, stay tuned. We've got some great programming. Tommy O'Brien with the Morning Market Kickoff. He's up next. Of course, if you are listening at 11 o'clock, we've got our Thinkorswim show out there. So everybody have a fantastic weekend. Thanks for putting up with my my changing voice during the week out here. And I'll look forward to seeing you on Monday. Take care, all.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This is TFNN, the Tiger Financial News Network. TFNN, headline news update.
Good morning, folks. This is Steve Rhodes coming to you live from the shores of, well, what looks like very cloudy Delray Beach, Florida. This is your 9 a.m. update, and currently we have U.S. equity futures trading to the downside. The Dow's off 358 points, a little over 1%, 0.5% for the NASDAQ 100 or 55 points, 1% for the S&P, 38 points, 1% for the Russell. That's down 18 points there. Over in Asia last night, you had a mixed bag. You had a flat market in the Shanghai. The Nikkei was off 524 points, nearly 2%, and the Hang Seng up 82 or 0.5%. Over in Europe this morning, you've got the Nikkei down 91. You've got the DAX off 91 and the FTSE down 107. That's about 1.5% to the downside. We've got gold trading up $9. Silver's off 9 cents. Light sweet crude is trading out at $74 even, Steven. That's off $2. Natural gas is down 40 cents. She's trading at 6.18. And the 30-year Treasury is down 1 point and 3 ticks. 130.31 is the print. U.S. dollar index is off about a nickel as we speak. Let's take a look at this 9-panel market update chart. What's this tell us? Well, although you don't really see it that well, yesterday was a break, a consolidation measured breakout. And that says that price should continue to head lower. That will most definitely be the case if we see the spot volatility index close above its 50-day exponential moving average. That has been tested. 23.98 is the 50-day. The high today so far is 23.83. Again, a price close above 23.98. That will suggest much lower price for the S&P 500. The NQ trading below the bottom of its bullish structured profile, closed below its consolidation pattern as well. That suggests lower price. U.S. dollar index formed a nice Rhodes momentum indicator bottom yesterday, a buy the D-point bottom yesterday. What price is dealing with is 104.23. If the U.S. dollar index is able to close above 104.23, it will make a run to 105.18. If both those things happen, we will see the equity futures trade lower, or should see the equity futures trade lower. Goldilocks finding resistance at the top of its weekly profile at 1836. Right now it's trading at the center of its daily profile level out there. Silver is trying to find support at 22.63. That's after forming a Rhodes momentum indicator top yesterday. Folks, stay tuned. Tommy O'Brien with the morning market kickoff. He's up next. Have a fantastic Friday, a fabulous weekend, and I'll look forward to seeing you on Monday, 11 o'clock sharp. Take care, folks.